This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best overvalued stock to sell right now. Today is Sunday, September 21st, 2014. The company we're going to look at, they are in the gold industry, and we see their 6-month downside potential at negative 41.6%. Going on to the next slide, and we see that the name of this company is called Barrick Gold. The ticker symbol is ABX. The industry, obviously, gold, and we see the 6-month downside potential at negative 41.6%. So this is one of these opportunities where if you do short stocks, this is an opportunity we think is worth shorting, or if you're interested in buying an inexpensive put option, this is also another appropriate opportunity in our opinion. On to the quick facts slide. Here's the business summary description. Barrick Gold Corporation produces and sells gold and copper. It is also involved in exploration and mine development activities. The company holds interest in various properties located in the United States, Zambia, Chile, Dominican Republic, Argentina, Tanzania, Canada, Saudi Arabia, Australia, Papua New Guinea, and Peru. So from that description, you can see that Barrick is a worldwide operator. Their website is www.barrick.com. That's BARRICK.com. The company is headquartered in Toronto, Ontario, in Canada. They were founded in 1983. The number of employees they have stand at 24,360. Once again, the ticker symbol is ABX. The sector they operate within is basic materials, and the industry they operate within is gold. Over the last 12 months, their annual revenues stood at $11 billion. The net income over the last 12 months was negative $2.8 billion. However, the cash from operations was $3.3 billion. Now, part of the reason for that big discrepancy, a large negative number versus a large positive number in cash from operations, the negative number is mostly due to some discontinued operations, specifically from one large discontinued mining operation in Argentina and Chile. The market capitalization for Barrick now stands at $18.2 billion. On to the products and services slide. Basically, we just have some descriptions here that are excerpts from one of their recent investor presentations. We have the Barrick logo, some of the announcements from management. Basically, they say they're taking a disciplined capital allocation framework, which means returns will drive production and production will not drive returns. It sounds like kind of a heads up to not expect any strong returns in the near term. They also have an excerpt. We have an excerpt from another slide that says stronger and leaner. It basically says $2 billion of capital and cost reductions, launch portfolio review focus on profitable ounces, 19 mines reduced from 27 in 2013, termed out $3 billion in debt, temporary suspension of Pascua Lama, that's the project down in Argentina and Chile, and they reduced the dividend recently by 75%. So, that's not the most favorable of news, as you can imagine. And we also have a slide here that also describes, gives the names of a lot of their projects located around the world. I mean, the names of some of their gold projects in the United States are Bold Mountain, Cortez, Golden Sunlight, Gold Strike, Ruby Hill, Turquoise Ridge, and Round Round Mountain, but they have a number of projects elsewhere as well. On to the metrics slide. Once again, over the last 12 months, Barrick had $11 billion in revenue. The net income, as described earlier, was negative $2.8 billion, and their cash from operations was $3.3 billion. Now, sometimes people may decide to ignore the net income number and then pay attention to the cash from operations. But the net income number, it takes into account the long-term steady earnings outlook of a company. So while there may be some comfort from a large cash from operations number, when you have such a discrepancy, you really have to stop and wonder and ask yourself, well, will that cash from operations continue? That's a very large question mark. Going on to our next slide in the metrics slide, the operating margins for 2013 were 47.1%, and the operating margins for 2014 are tracking to be 36.5%. So that's also a substantial decline in the operating margins. On to the valuation metrics. The trailing PE ratio now stands at 15.5, and the forward PE ratio stands at 29.5, and that implies that most stock analysts expect earnings to decline substantially over the next year. The PEG ratio is negative 0.7. Whenever you have a negative PEG ratio, that's an alarm. The price to sales ratio is at 1.7. Not too expensive. The price to book is at 1.4. Also not too expensive. The enterprise value to EBITDA ratio is at 6.0. The recent closing price for Barrick was $15.65 on Friday. The 52-week low for the stock was $15.26, and the 52-week high for the stock was $21.45. So from that, you can tell the recent closing price is very, very close to the 52-week low. The 20-day moving average is $17.52. The 50-day moving average is $17.50, and the 200-day moving average is $18.70. And that basically just confirms the recent decline in price. The average daily trading volume for Barrick is 9.1 million shares per day, so it's a somewhat heavily traded stock. The beta for the stock is at 0.3, so there's not too much correlation with the stock market. That's for sure. And the dividend yield is a modest 1.1%. Although that's a backward-looking number, and they announced that they're reducing their dividends, so that figure may come down further. And the average dividend payout ratio has been 35.3% over the last 3 years. And additionally, we should question whether that level will hold. Onto the price chart for Barrick. Looking over the last 12 months, the stock has returned a negative 15.9%. Basically, the stock is down negative 16% for the year. But over this year, it's definitely been kind of a volatile ride. A year ago in September, the stock was around $18, and then it declined in December of 2013 down to around $15.50, and that's as a result of the suspension of that project that we mentioned down in Argentina and Chile. And from December 2013 through, I'll say, late March of 2014, the stock picked up quite a bit. So it went from about $15.50 up to about $21. And the main reason for that increase was primarily optimism. I mean, basically, the CEO, who was the founder and chairman of the company, had announced his retirement. So there was hope that things were going to change around. But as it turned out, from that high of $21 in late February, the stock slid back down to around $16 in early June. So that slide from $21 in late February to $16 in early June was primarily as a result of disappointing earnings. When the earnings came out in late March. There was an earnings disappointment, and the analysts found out that cash flow had decreased 39% from the year ago level. So, and then, once again, so from June of 2014, where the stock was around $16, it then increased up to around $19 through, say, August of 2014, so it increased from $16 to $19, and the reason for that increase was that gold as a commodity in general increased in price. However, after that point from the $19 to today, the stock is down around $16, a little less, and the reason for that was that in mid-August, the company announced that they were discontinuing their corporate development team. So when you're getting rid of your corporate development team, that's a pretty clear signal that you shouldn't expect any new projects anytime soon. So over the past year, Barrick has been down 16%, but it's definitely been a roller coaster ride with a number of announcements, both positive and negative, but obviously mostly negative. On to the next slide, our summary slide. The financial statement quality of Barrick, we rate as fair. Over the next 5 years, they have about $2.3 billion in debt that's due. And while the cash from operations is around $3 billion this past year, we're just not confident that level of cash from operations will continue. Maybe it will, and the debt won't be an issue, but considering the large level of negative net income, we think it's reason for concern. So we consider the financial statement quality to be fair right now. And as we mentioned earlier, the operating margin trend is declining. It declined from 47% to 37%. The price pattern trend, we're seeing declining. It's oscillated, but it's down net negative 16%. So right now, overall outlook on the market is neutral. We're seeing a few overvalued names and a few undervalued names. So we don't think Barrick will be pushed one way or supported one way or the other. So the recent closing price of Barrick, though, was $15.65, and based on recent earnings announcements and outlooks and historical valuation levels, we see the 6-month potential price target at $9.14. So we see Barrick as having the potential to decline negative 41.6% over the next 6 months. So this is why we believe that Barrick is the best overvalued stock to sell right now. So we hope you found this presentation helpful, and we'll talk to you next week. Take care. Bye. Hi, this is Mathis from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So, hey, that takes care of my educational background. Basically, bottom line is to see, yeah, I did a lot of schooling. What my career experience has been to date, I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA. And basically, I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager, and basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com. cmg.com, or you could go to our website and you can see a presentation that compares kind of management groups side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.